So welcome to today's presentation on how to get 20% dividend per year. And I'm Eric, CPA, and this is also my daughter, 6 months old. So let's get started. So our mission is to help people retire predictably. We do this through financial education and also AI-powered investing. So 79% of Americans agree that there's a retirement crisis. And this is true for Americans, Canadian, and the Western world. So the Social Security Trust Fund in US will be depleted in the coming years. So here you can see the graph on the left side that within the next 10 years, the OASI will be going to zero. And on the right hand side, you can see that once the trust fund is depleted, that will lead to a 23% reduction in benefits in 2035. So there's a very strong demand for Americans, especially boomers, to retire predictably and also to get a higher return for their investment. That's where our company comes in. Our target market is 45 to 65 years old professional without a financial background. For example, engineers, doctors, nurses, programmers, and their investing account is somewhere between $50,000 to $1 million. The traditional finance method is to save $1 million, and you get a 4% withdrawal rate, which is $40,000 a year. And in order to achieve that, you need to save a significant amount of money, which means you need to work for 45 years. And most people can't retire under this model because it requires a very long time of saving and also investing correctly. So instead, our company's approach is to focus on saving $300,000, help people retire sooner by teaching them advanced investing strategy, so then they can get $100,000 a year, and it allows them to replace their income. So there are two parts to Investing Accelerator. The first part is the education program, where you learn how to do it yourself. And the target is 20 to 30% because we focus on more advanced investing strategy. So here you can see that there's the Investing Accelerator coaching program where the lessons are, and also the weekly coaching call where we go through and provide a market update and analyze specific stocks if needed. On the right-hand side, you see the AI mutual fund where we invest for you. So instead of doing all the work and learning how to invest, you just buy the mutual fund and you get a target of 20% return net of all fees. So for our education side, we focus on teaching our students. So far we have 550 students, and here you can see that Flo is making 45% in 2024. Anthony made 61% in 12 months, and Edward here made 50% in 2023. And our tuition revenue has been increasing since we started raising capital, and we're reaching 1 million annualized revenue for 2025, and our target is to get to 2 million to 3 million annualized revenue in 2025. So here you can see the monthly tuition revenue figure. So this is the sign up, and then they pay this amount over 12 months. In 2023, September, October, November, December, these are usually the slower months, and you can see the average revenue there is around 25 to 28,000. And then after August 2024, that's when we start scaling our systems, increasing the amount of leads that go through our funnel, and that leads to 42,000 in September, 75 and 72,000 in October and November, and the latest month, December, we're ending up with 98,000, and this is a 300% increase compared to last year December. So for 2025, our target is 2 to 3 million after we raise more capital. So we have been running this funnel and system for the last 5+ years, and the return on average is around 1.5 times to 2 times. So we spend 1.2 million in ads so far, and we get 2.5 million in revenue back. And here you can see the Google Ads screenshot on the cost, the clicks we get, which is 300,000, the click-through rate, cost per lead, and cost per call, so on and so forth. So here's our expansion plan. The education arm is the foundation of our business, and now we're looking to build 2 funds. One in Canada for the retirement accounts, RRSP and TFSA, and our goal is to launch this in late 2025 or 2026, depending on the lawyer and the accountants. And the second fund is a US private fund. And both of these funds, the target is a net distribution of 20%. On a monthly basis, that will be a 1.67%. And the management fee is 0.5%. So if you want to invest in the hedge fund business and the education business together, you would be investing in Investing Accelerator, which is a company based in Hong Kong. And you as an early investor will get 20% in dividend on an annual basis. That's the target. So for the fund, is mainly going to be deploying our AI investing strategy, and the target is 20% return a year. And the AI focuses on avoiding bearish periods. So in this graph, you can see blue means buy, which means the AI is holding the stock, versus red means cash, meaning they're not holding the stock. So in this case, you can see that during the 2022 bearish market, AI was only down 8% and S&P 500 was down 19%. So the AI is able to beat S&P 500 during a bearish period. And for the investors, we aim to distribute 20% even during a bearish market. So here's the historical track record based on the backtesting result. So the AI is making 20% a year, and using real capital in 2024, we achieved more than 20%. So here is a quick comparison. So for S&P 500 is 13% return a year for the last 4 years, and a Sharpe ratio is 2. And this means how much risk you're taking relative to the return you're getting. QQQ is 14%, Sharpe ratio is 1.75. So you want this Sharpe ratio to be higher, because if the stock is very volatile, then the Sharpe ratio goes down. QLD, which is a 2x leverage version of QQQ, the return is 18%, and the Sharpe ratio is 1.3 because it is quite volatile, which is why the return per unit of risk is lower. And finally, for the AI, the target is 20%. Our Sharpe ratio, which is the reward divided by each unit of risk, is 2.5. So even during bearish period, our target is to distribute 20% a year. Now compare that to the top 50 hedge funds in the world, net of all fees. The historical return is 15% and the Sharpe ratio is 1.75. And this is really because their fees are quite high, which is why the return you're getting after paying everybody is so much lower. So using real life example, 2024, Citadel Wellington, they manage billions. Their return is 15.1%. Millennium, founded by Jim Simons, their return is 15%. And the AI, actual, using the corporate account of the company, Investing Accelerator, the return is 40%. And we only started mid-late 2024, and we already achieved over 20%, which is our target. So this is the net of trading fees, excluding the core business education expenses. So if you're planning to invest in the mutual fund and the hedge fund, you would get paid 20% without the performance fee. So S&P 500 is 13, QQQ is 14, top 50 hedge fund is 15. So how is it possible that Investing Accelerator can offer 20% net of all fees? And the reason is because when Investing Accelerator makes 20% versus a hedge fund making 20%, the management fee for a typical hedge fund is 2% plus 20% performance fee, whereas Investing Accelerator only has a 0.5% of management fee. So after deducting all the fee, which is the total fee here, 5.8%, that gives you a net return of 15, whereas for Investing Accelerator is 20. Now the key difference is that the max return for the hedge fund is unlimited and very volatile. It can suddenly be 100% 1 year or down 20%. But for Investing Accelerator, we focus on distribution. So the target is 20.5%, and that is the payout you get every month, which is 1.67 to 1.7%. So usually hedge funds, the lockup period is like 3 to 5 years, and there's no monthly distribution because the things they invest in might not be necessarily liquid. But for Investing Accelerator, you get monthly distribution, and you get your first dividend 30 days after you invest. And the lockup period is 2 years, which is shorter than a typical hedge fund. And eventually we want to do it in such a way that you can redeem it upon demand like a mutual fund. So if you want to exit tomorrow, you can exit tomorrow. So if you're planning to use a retirement account to invest, which is applicable to US investors like Roth IRA or IRA, then you can also choose to reinvest your dividend. So for example, if you're investing 200,000, your cash distribution will be around 40,000 a year, which is 3,000 a month. So this creates an income stream for yourself for retirement or to replace your income or boost your income. And if you don't need that immediately, by the end of the year, you can choose to reinvest and basically buy more shares into the parent company or into the fund. So let's talk about the different investment options that are available. So for the self-directed US IRA account and cash account, you can invest in either the US private fund, which will be coming in 2026, so not yet, or you can invest directly into the Hong Kong parent company. So for these two, you need to be an accredited investor, which means your net worth excluding your home needs to be over $1 million, or your income needs to be over 200,000. So the target return for the fund is 20% per year, whereas for the Hong Kong parent company is 20.5% per year with the option to go IPO with us. So these preferred shares in this green column can be converted into common shares if we go IPO and be traded on the US market. Now for the distribution is monthly, and for the preferred shares in the middle, it's monthly as well, and the dividend is 30 days after you invest. Now for the US fund, there's a limit of 100 investors, but for the preferred shares, there's no limit as long as you're accredited. So 2-year lockup, and the minimum investment is 200,000 for the US fund because there's only 100 investors, whereas for the preferred shares into the parent company, it's only 100,000. So for the brokerage, you need to use a special brokerage with IRA accounts to invest. So that will be Alto, that's the one we're working with. And it will be available 2026 to 2027, whereas the preferred shares today, you can invest the beginning of the next month. So for the Canadian RRSP and TFSA accounts, which is the retirement account, the target is also 20% return a year, and the distribution is also monthly with unlimited number of investors. So this will take some time to set up because of all the regulatory filing we have to go through, but the minimum investment is lower, 50,000. And you should be able to open it with a major bank like National Bank of Canada or Fidelity, and this will be later 2025. So today, if you're interested in getting the 20% dividend, you would schedule a call with me, and the middle option, which is the preferred shares into the Hong Kong company, is what's available. So here's the projected financials. So basically, for tuition revenue, we're looking at 700,000 for 2025. For December, we had a stellar month, which is close to 100,000 a month, and I think this will continue. So I think for tuition revenue, we should be somewhere between 1.2 to 2 million in 2025. For hedge fund income, I put $1 million here, but we haven't set it up yet, so most likely this will be pushed to the following year. And an investment gain and loss is the capital we're using to generate a track record before officially setting up the fund. So 20% will be used to expand the coaching program, while 80% will be used to set up the funds, the admin costs, legal fees, and also used in the investing strategy as well. So in terms of the team, my name is Eric. I'm a CPA, Chartered Investment Manager, and ex-KPMG. I'm a serial entrepreneur. I used to teach accounting in University of British Columbia and also created teaching materials for Masters of Accounting class. And I also taught data science, machine learning to hundreds of KPMG employees. I was also an auditor for Canadian mutual funds, hedge funds, US banking conglomerate. I was also an M&A advisor for private equity funds in China and other corporate clients. I also built a data science and machine learning team for KPMG. In 2024, we raised $1.4 million. So this includes angel investors and also funds that are parked at the moment, waiting for the mutual funds and hedge funds to be set up so they can invest in it. So that in 2025, our goal is to raise 50 million. So you as an early investor today, you can get a target dividend of 20% 20% in preferred shares. And once you subscribe, you'll get your first dividend by the end of the month. So the dollar per share is $20 per share. And our next round is $150 a share. So if you're interested in exiting early and we oversubscribe, we can connect you with other investors so then you can sell your shares back out. And of course, if you want to stay with us all the way till IPO, we would love that as well. If you want to schedule a call with me to get the investor package, you can click on the link below and schedule a call. So we'll hop on a 60-minute call. You can ask any questions you have. We'll go through the agreements together and any slide you have questions for. And if there's any additional documents you want to review as part of your due diligence process, you can request it as well after scheduling a call. So I look forward to chatting with you, and thanks for watching this presentation.